Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So in this video I'm going to talk about one company that has been on my watch list for a very long time. I sold this company a very long time ago, I think about 3 something years ago, and since then it has gone up so much. At the time I felt it was overvalued. What I'm going to do now is I'm going to do a quick analysis, just look at the information about the company, so like what they do and so on. We'll look at the fundamentals of the business, we'll look at the valuations, and then we'll compare that company with its peers as well as the S&P 500. Now the reason I want to do this is because I'm interested in the company, so in the long run potentially I might be adding this company to my portfolio, so I want to see if it's a buy, sell and so on. I regularly do this because I always like to share my journey with you guys. I talk about certain companies, and if they're overvalued, I'll leave them alone. If they're undervalued and so on, then I share it with you guys every time I actually buy a new company, and I'm going to continue doing that, inshallah. And if you're enjoying this type of content, you're enjoying the transparency and everything we're doing here, please join us on the Patreon account where you get access to a lot of things, including you get all the buys and sales, including the family portfolio, and then there's loads of little things that I add on regular basis, so you can get access to all of that, as well as of course joining the Discord where you've got a lot of brothers who are sharing very good practices on daily basis. And if you can't do that, of course, like the videos, subscribe to the channel, and of course if you press that like button, I promise you it does a lot, right? We can reach more brothers and sisters out there and help them, and that's the most important thing for me. I started this whole YouTube thing just to inshallah share my journey with you guys, and at the same time reach as many people as we possibly can. So let's reach out to brothers and sisters out there by subscribing to the channel, of course, first of all, and like that the videos and so on. Anyway, let's now move on to the company that we want to talk about today, and that company is Waste Management. This is one of the companies that I like I said earlier, I used to own it a long time ago. This is the company that collects the garbage and kind of basically recycles and does all of that side of things. As you can see, in the last 6 months, 3.66% down. Okay, a year to date is about up 14%, which is quite nice. And as you can see here, when it comes to Wall Street as well as Seeking Alpha, they are saying all buy. So I'm really interested in the company and I want to see. And as you can see, the current PE is about 28. So we want to look at the current PE, the forward PE, in comparison to where the company has been over the last few years, because sometimes looking at the current PE or the forward PE, it doesn't really tell us the full story. We want to compare that with the last 5 years and see if the company is trading way higher than where it used to be, and so on. So what I'm going to do now is I'm going to go through the financials, but before I do that, I just want to mention this. So they have reported earnings recently where they missed the basically top line and bottom line as well. This was basically the lowest miss that you can find, but year on year basically they were up about 5.5% when it comes to revenue side of things. So they missed what was expected of them for that quarter, but for that 1 year, this time last year, what they reported, basically they were higher 5.5% than what they reported. And as you can see, there's a little bit more information of what they reported. Collection disposal yield was 4.6%, and collectible and volume declined 0.3%, which is not basically a lot if you think about it. The total company adjusted operating EBITDA, for example, grew about 10%, so $1.62 billion, and a margin expansion of basically 130 basis points to 30%. And basically on adjusted basis. Now the other thing I found it really interesting is this part here. The net cash provided by operating activities increased to almost 22% to $2.52 billion in comparison to the year before, which is absolutely amazing. It's just the fact that net the operating activities increased about 21.6%. Now the other thing as well is the free cash flow before investment and high return in sustainable projects grew about 41%. That was $1.63 billion. So everywhere you look at this company has done absolutely amazing. So I'm not sure why basically things have not, maybe this miss because of that. This stock was down quite a bit on the day when they reported. And with comparison with the outlook, there's absolutely nothing, to worry about. They've got the adjusted operating EBITDA of between $6.3 billion to $6.5 billion, and free cash flow including sustainable growth investment of between $2.15 0 to $2.15 billion, which is absolutely fine. So when you look at this space, the rest of the information is absolutely fine. It's just this bit that they've actually missed, and since then, of course, this stock has actually rebounded. So if you, as you can see here, they've reported, I think they were reported in July. Let me have a quick look. Yeah, the 24th of July is when they reported, and so if you look at the last month, it's done about 1.5%, and the last 6 months about 3.66%, but for a year to date is almost 14% up, and for the 1 year 27.5. Now think about this. This is a company that's basically collects garbage and recycles and does all of those things, right? And look at this, basically 1 year return 27.5%. We will check out total returns in a second, but before we do that, there's a few things that we need to look at. Like I said, this West Management has a basically stable business model and enjoys a wide economic moat rooted in untouchable assets. So the regulatory permits of the landfills that they have, other companies cannot basically touch that, which is absolutely amazing to see. That's why they have a wide economic moat here. Now, current stock price is $204 per share, and we've got EPS of $6.29, and as you can see, beta is actually quite low, which is quite nice. So current PE is actually 32, and the forward PE is about 28. The 5-year average is 29. So based on this, actually it doesn't seem that expensive, but based on the sector, so remember this is industrials, so the industrial sector currently trading about 20, and the S&P 500 is about 29 right now. The price to free cash flow about 39. And when it comes to dividend yield, they have 1.4% dividend yield. So that's $2.95 for every share of this company that you own. Payout ratio is quite low, 42%. Latest increase was 7%, which is absolutely amazing. And the 5 years, 9%. So this is what I like to call dividend growth companies. Normally, when I'm looking for dividend growth stocks, I'm looking for 7% or more. It used to be about 6, so I've now changed it slightly. I'm looking for companies that are growing that dividend and the last 5 years about 9% or 6%, 7% or more. So that's 7%. That's a sweet spot. So if you can find companies that are growing that dividend 7 year 7% or more, that will be easily inflation, and of course that is a nice growth. Okay, the 20 years of increase in that dividend, 74% safety, which is absolutely fine. $2.1 billion of free cash flow to cover all of that. And again, free cash flow is important to us because that's the money the company uses to pay off any debt, to buy other companies, to buy back their own shares, to pay us dividends. So there's a lot they can do with that. And the free cash flow compounded annual growth rate for the last 5 years is basically 4%, which is good. Okay, there are companies that do not have a better conversion, but that 4% is not bad at all. Free cash flow yield of 3% and free cash flow margin of 10%, absolutely fine. Again, we're looking for anything above 3, anything above 4 and 5. Profit margin 12%, operating margin of almost 20%, and return on invested capital of 32%, and return on invested capital, return on equity of 35%, and return on invested capital of 16%, which is absolutely fine. So the management are doing really great job. Okay, this company is profitable. They are using that money to kind of reinvest and do a lot with with that money, so generate more revenue and more profits for us. The net income compounded annual growth rate for the last 5 years is 8%, which is also good. Total return in the last 10 years is about 17% per annum, which is absolutely amazing. And revenue grew about 7% compound annual growth rate for the last 5 years. EPS about 14%. And current ratio is above 1, which means they have enough liquid assets they can liquidate if they need to in the next 12 months to cover their liabilities. Okay, so that we're talking about current liabilities. Growth estimate for next year, 10%. And then 12% after that for every single year. Now, can you imagine this? 12% every single year from a company like this. That's absolutely amazing to see. Current price we've already seen $204 per share. According to Morningstar, they expect the price to be $170 per share. Okay, according to Simply Wall Street, they expected $261 per share. That's about 22% undervalued right now. According to Tuprak, next 12 months they're expecting to be about 10% upside from where we are, and that's $224 per share. Very close to these guys here. And then 222 from also Seeking Alpha, which is basically about 9% upside from where we are, and it's a buy. So we have a buy, we have a basically moderate buy, and we have undervaluation of almost to 22%. According to Morningstar, it's the only one that is saying is right now expensive. Now, what would I be doing? I think I would kind of sort of go in between, and I'll show you exactly the valuations. Once we're going to take all of this, and then we'll do a basically different types of valuations, and we'll check that in a second. Now, in terms of Sharia compliance side of things, absolutely nothing to worry about. This interest bearing debt is slightly higher than I would have liked, but 25 or higher, that's when I actually stopped basically thinking about these kind of things. But 20% is not that bad. Now, shares outstanding, look at this. They have been buying their shares, which is absolutely amazing. Over the last 10 years, they bought quite a bit of their own shares, which is very, very nice to see. Now, let's have a look at the valuation then. So we've got Morningstar valuation, we've got Seeking Alpha, Simply Wall Street, we used the dividend discount model, and the multiples valuations, which are basically used. Okay, now average all of it out, you got $228 per share. Let's call it $229 per share. Current price is $204 per share. That's 12% upside from where we are right now. Then you might want to say, do you know what, I don't basically think this company, you know, maybe it's a bit volatile, whatever the case might be. Add your 10% margin of safety, that's about $206 per share, so it's still a buy. Then you might say, you know what, if I own it, and or maybe I don't know what is going to happen, maybe that industry is not great, whatever the case might be, of course, then it's basically $194 per share. Now that's basically your entry point, $194 per share. Let's call it $195. For me, I will not be touching this unless it goes below about below 190. Okay, if it goes below 190, that will give me about 17%, basically 18% basically margin of safety, which I would like. Okay, and if that happens, I will be happily buying this company and adding to the portfolio. Now, I like the matrix here, the basic, a lot of the information here I'm happy with. The only thing I'm not happy with is just the valuation for this company. Now, final thing I want to talk about is the comparing basically with the industry. So we've got another two companies that are very similar, and we got the S&P 500. So if you look at the last 3 years, total return from this company was 40%. S&P 500 was 30%. This one here was almost 70%, and this one was 43%. So this one has beaten this company, but the rest of them are almost the same. Last 5 years, we look at waste management. You can see 93, but no, let's call it 93%. The S&P 500 90%. So it still again has beaten the S&P 500, but these two have done absolutely way better than, of course, with against waste management. Okay. Now the final one, 429. Let's call it 430. Okay, 187 again has beaten the S&P 500, but these two have done it slightly better. Now, it's amazing the fact that they basically, when you look at the 3 years, when you look at the 5 years, and when you look at the 10 years, it has outperformed the S&P 500 and this type of business. Right, final thing I want to show you guys is the estimates moving forward. We've already seen it here. Okay, we've already seen the averages here from about 12% or so, like right now looking about 17-18% for the next year, 10%, 10%. Okay, 8, 9, almost 9%. And then when it comes to revenue side of it, we're looking at about 6%, 7%, 6%, 7%, 8% for the next few years, which is absolutely amazing. So that's the company that I want to share with you guys. This is, for me, is one of the companies that I will be adding to the portfolio in the long run, but I need it to come back down before. If it goes, like I said, below 190-ish, then I'll probably be very interested. I'll probably be adding this one to the portfolio. That's all I wanted to share with you guys today. If you are enjoying this type of content, it takes a lot of time and preparation to put these videos together. All I need from you is like the video, subscribe to the channel, let me know if you have any questions by joining us at the Patreon account, where you get access to a lot of things, including the Discord and so on. And inshallah, I've got a few more single videos that I'm going to analyze in the next few weeks. So just put your whatever you're basically interested in, any companies that you're interested on the comment section, and inshallah I will look into it. Have a wonderful day. Assalamu Alaikum.